Hi, everyone. Happy Thursday. Missed you guys last week. Missed having, definitely felt like I haven't been here in a while. It's only been 1 week. We only took 1 week off, but it felt like a long time. For those of you that celebrate Thanksgiving, I hope you had a good holiday week or few days, whatever that looked like for you. Let's see. Let's jump in. I'll tell you, I forgot to make an event for this. For those of you that watch in the Facebook group, I'm usually pretty good about making an event, even if it's the day before, and I definitely forgot. So for those of you that usually catch this live, I apologize. Hopefully you still got a notification that I'm going live. Otherwise, replay is our friend, right? Watching these things on replay is great. All right, for those of you that don't know me, I'm Bree Beers. I've been in accounting for 20 plus years. I own Bree Beers and Associates, which is in its 7th year. It is a tax preparation and planning firm here in Denver, but we work with clients across the country. We specialize in small business and complex individual tax returns. Complex individual tax returns means business owners, investors, owners of rental properties, things like that. I'm also the founder of Peak Prosperity CFO. We are a fractional CFO company who works with 7-figure business owners and our goal in the first year of working with them is to boost their annual compensation by $100,000 by providing profit-centered thought leadership. So essentially what we do is we find 7-figure business owners, or they find us, who are feeling stuck and wanting more work-life balance, wanting more money out of their business into their personal bank account, and we make that happen. So today is part 3 of our wealth model. All right, today is the A of wealth, and it is all about adapting your mindset. So let's start with, is this you, right? And so what I will refer to this a few different times, but I talk about a cycle of financial stress. And, let me know if you've found yourself in a cycle of financial stress. And what I mean by that is it can be when things are good, it can be when things are bad, right? So if cash feels tight, if revenue feels slow, we might start cutting costs, right? That is a very common go-to is cash feels tight or things feel like they're kind of on the downturn. So let's cut costs. But then what happens a lot of times is we cut these costs that were generating revenue. And so then we're making less revenue. So then we got to cut more costs. And it's the cycle of never having enough money, never cutting costs enough. The other flip side to that is maybe we're in a place where we feel like we have the cash, but we want to increase our revenue, right? So we start adding expenses. Maybe we hire a person, maybe we buy a piece of financial equipment, whatever that looks like. But the return on investment, the revenue we make from that additional investment or expense, the revenue, it just isn't enough, right? We're still tight, not feeling like we're getting that return on where we're spending that money. And so we're constantly going in that circle. So it can go in either direction, right? And we've all been there. And the end result is that it eventually leads us into this fear of investing in new opportunities, right? It's either we're cutting things and we just never cut enough. And, so if we can't cut enough, we're definitely not going to spend more, right? Or we keep spending, but it's not doing anything. So we freeze. We kind of freeze and we're just we're not going to do anything. We're not going to spend any more money. We can't cut anymore, so we're just not going to do anything else, right? And this is especially common in an economic environment, kind of where we're at now, where there's a level of uncertainty, or maybe there's a lot of negative outlooks when it comes to many industries and many markets, right? And we're seeing that right now. We're seeing some, people throw around the word recession. I say economic event, or, kind of a chilled economic climate, right? So when we get into those places, we especially kind of get to the we freeze and we're like, okay, we're not going to spend any more money because we don't know what's happening. All right, I've been there too. And it's not just with the money, you guys. So we're going to talk today about scarcity mindset and abundance mindset. And I have struggled with the scarcity mindset for years. I still sometimes get, sucked into it. But so there's scarcity around not having enough clients, right? So we might cut our prices because we are afraid that we're not going to get these clients are going to go to H&R Block because H&R Block is cheaper, right? So we lower our prices to compete with H&R Block. because we're afraid that everyone's going to go to H&R Block, right? It might also be that maybe we have a new idea, a new concept, a new service, a new product, then we see someone else doing it. Like, oh, well, they're doing it already. So no one's going to come have, no one's going to have me do it because it's already being done. And I did that too, right? I'm like, oh, people are like tax planning. When I got into tax planning years and years ago, I was like, oh, well, there's already a ton of tax planners out there. Why would people use me? But you have to remember the abundance mindset comes from, they don't do it exactly like you, right? Only you are going to do it the way you do it, right? And and there are plenty of clients out there. You've got to find the right ones. All right, we'll talk about that in a little bit. But that took a long time for me to get over that scarcity mindset around number of clients. Okay. Another one is around good employees. For us, we had an admin when I first took over the tax firm 7 years ago. We had this amazing admin. She was great. She, I thought she was the bee's knees, and she was so good, you guys. She left to go back to school to not be an accountant, to be, I think, a behavioral scientist. And, she left, and I was like, oh my gosh, like, not panic, but kind of panic. Like, we will never find someone that can do what Nadia did. Love Nadia. But we did, we trained someone else to do what she did. And we'll talk about that, but that scarcity mindset definitely got to me. And then there's a scarcity mindset around cash that we all fall into at one time or another. And in simplest terms, for me, right, it was billings down, so got to cut all the expenses. And a little story about this and me. So since the dawn of time, since I started being a business owner, when I do my projections every year, I do a worst case scenario projection, which is fine. When we do projections for clients, we'll do worst case, expected, and best case. Well, for myself, I would always just do the worst case. And guys, that is not a confidence booster. I'd be like, okay, revenue. Well, this year we made this much, but there's a 10%, turnover rate. So let's assume that 10% is going to be gone. I didn't account for the fact that when clients leave, other clients come in, right? So I just decreased by 10% when I did my projection. I was like, I didn't raise prices on my projection, even though we raise prices every year. And then with expenses, I'd be like, well, expenses are going to go up 10% because of inflation. So we got to increase that. And we're going to have to hire someone. So I do this like lowest revenue, highest expenses. And I'd look, I'm like, oh, well, we're going to lose tens of thousands of dollars next year. So this sucks. And so there was never enough cash in my projections. And obviously that's not the case, right? Because 7 years later, Bree Beers and Associates is still alive and kicking. Started a new firm. So, but that was like a toxic or red flag for me, is that I'd always do a worst case projection. And oftentimes that's all I do. It's like, come on, do you do that for your clients? No, Bree. So why would you do it for yourself? But so the point of that is like, there's a scarcity around cash, right? And I had it. So how did I fix it? So I've done a ton of work in the area of abundance mindset in all aspects of my business, right? There are plenty of clients out there. They're, getting to the point where I want the right clients. I don't want all the clients anyway, right? You're not attracting everybody. If they can go to H&R Block, let them go to H&R Block. You want the people who want a trusted tax advisor, not a tax preparer, right? They want your clients or BBA clients want us because we're going to maximize their deductions. We're going to make sure they're taking everything they can. We're going to make sure their tax returns filed correctly. If not, we're going to make sure we resolve it with the IRS. All these different things, right? That H&R Block may or may not do. But they don't want just tax preparation. It's a little more complicated, right? So we want the right clients. And same with my CFO practice, right? We don't want every business owner. We can't take every business owner. We can't help every business owner, right? But there are plenty of business owners that fit my niche. 7-figure. I love women business owners. I do have non-women business owner clients, but love my female business owners in manufacturing, distribution, construction. And you guys, that criteria in Colorado, there's dozens. There are dozens of 7-figure women-owned manufacturing, distribution, and construction companies in Colorado. So there's way more around the country. So there's plenty, right? There's plenty of clients out there. All right. There are a lot of good employees out there. You just got to find them. One thing I've learned from this place is that it is more about finding the right people that fit your business culture and your dynamic, and then training them to be good employees. All right. So good employees are made out of the right people receiving the proper training. All right. Not finding the perfect employee, because every business is different. It's just finding the right people is more important. And then the other thing I did is I stopped cutting costs, right? Like, that's not true. I still cut some costs, but I just stopped automatically cutting costs, like going into that, right, financial stress cycle. Oh, cash is tight. Stop paying everything, or stop, cancel all of our subscriptions. We're done. No, because again, we kind of talked about this, but many of the costs of running our business directly relate to revenue. So if you cut them, you're going to cut into your revenue. You don't want to do that. So you want to cut the expenses that are appropriate. But if you cut too many expenses and you cut the ones that are producing the revenue, you're going to find yourself in that financial stress cycle. So stop that. Stop cutting all those costs. I started analyzing my costs, right? Like, does this cost generate revenue? How much revenue? Really digging into that. All right. So what have my clients done as well? Like, with this abundance mindset. So when we work with CFO clients, part of it is it does take an abundance mindset to do a lot of the things that we ask our clients to do. All right. So one of my clients last year, they increased their profits by 50%. In turn, profit over revenue, but they also doubled their revenue. And within that 1 year, and they did this by strategically investing in equipment and employees, not arbitrarily, but strategically, right? And that takes an abundance mindset, because I'm asking my client to spend money that they may or may not be comfortable spending, right? But I give them that assurance, like, we can spend this money on this piece of equipment. We have the cash, and it's going to, you're going to get a return on investment in 2.5 months or whatever it was. I can't remember exactly. Same with an employee, right? We're at capacity, so we've got to hire someone. And if we hire this person, then we're going to be able to increase our revenues by this much. So that's one of my clients. Another client improved their cash flow by optimizing their pricing strategy, which is a fancy way of saying they raised prices. And raising prices obviously takes an abundance mindset. We talked about, right? Like, there's that scarcity mindset if there's not enough clients, or you get this scarcity mindset of, if I raise prices, my clients are going to leave. And then, so raising prices definitely takes an abundance mindset, or optimizing pricing strategies. So in the old world, guys, there was a focus on cost cutting and, avoiding risk, and looking at this kind of this zero-sum game mentality. So, no harm, no foul. I don't know. But then the new world is value creation. Like, how do we spend smartly, spend wisely? We call that strategic investment rather than just spending, and really looking at the big picture, thinking long-term. One of my mentors told me it's not just about surviving, it's about thriving. And that's the thing. If you set your bar to just barely survive, then if you don't hit it, you're going to fail, right? You're going to fail. Your business you're going to go out of business. You're not going to have a business anymore. But if you set your goals at thriving, right? You set them up here, even if you don't quite hit it, you'll still be in biz. You'll still be in business, right? You'll still be in the game. All right. So there's a little bit of gap. So it's thinking about thriving and setting goals that result in thriving. Not panicking, not going into survival mode. And we've had trainings on survival mode, because sometimes you just get there. But the goal is to not have to be there, right? That's the goal. So let's talk about, so how do we create an abundance mindset, and specifically around our business finances? So we got to start with the fact that you got to recognize how easy it is to get sucked into this doom and gloom mindset, right? And the doom and gloom mindset, very related with scarcity, right? With the scarcity mindset, they kind of go hand in hand. And social media, yeah, tell me about it, right? Social media will just suck you right into that doom and gloom. The current uncertainty of the economic climate, right? Like I said, there's the word recession is being thrown around. I say economic event. But when there is an uncertainty in the economy, that definitely gets you thinking survival mode, not thriving, right? So it's important. The one thing I just want to remind you here, when you start to get sucked into that doom and gloom and into that scarcity mindset, I want you to remember that there are more millionaires and billionaires minted during economic downturns than any other time in history. All right, I'm going to say that one more time. There are more millionaires and billionaires minted during economic downturns than in any other time in history. And you can look as recently as the pandemic, as COVID-19, the pandemic, right? Big companies became much bigger. All right. And if you know me, you know that I have a love-hate relationship with capitalism, but we live in a capitalistic society, right? And unless things change, in order to survive here, right? Like, you got to play the game. You got to play the game. So economic downturns, we can make money in them. We can make money in these economic downturns, and rich people become richer, and we can make money. We can thrive. All right. It means, and in these economic downturns, they also mean more investment opportunities. And next week, we'll really dig into investing over expenses. So appreciating, right, that it is easy to get sucked into this doom and gloom mindset, especially with social media and the economy the way it is. But we need to move from this scarcity mindset that many of us have been ingrained with, right? Flip the wrong here. We've been ingrained with this scarcity mindset, and we need to move away from the scarcity mindset and into this abundance mindset. Because again, I think I said this already, but when a business starts to cut all of the expenses, which is what happens when you are working off of that scarcity mindset, you are going to cut the people and the systems that are creating your revenue, right? If you start cutting all your expenses, you're going to fire those people who are making the money. You're going to get rid of the tax prep for software. You're going to get rid of the systems that are generating that revenue, and you're not going to be any better off, and you might be worse off. So that cutting all expenses leads to that financial stress cycle. So we don't want to do it. Okay. And one of those things is remembering decades, not days. All right. And this kind of goes along with that thrive, not survive. I'm all about little things, right? So think decades, not days. You want to think long-term. All right. Cutting X, Y, and Z expenses, that's going to help tomorrow's cash flow. But in 1 year, we're going to be out of business because we're not going to be making the revenue that was generating anymore. All right. You with me? So alternatives to cutting all the costs, right? Because that's where scarcity mindset leads us, is to cutting all costs. So you use that abundance mindset that you're learning to focus on value creation. And one really easy question to ask yourself is, how can your business add value to your current customers? Okay. How can your business add value to your customers? And why is that important? Because adding value to your customers is going to keep your customers, right? It is going to attract new customers. And a lot of times you can add value in very little, simple, and cheap or inexpensive ways that are, easy on your pocketbook or on your checking account. Pocketbook, come on, Brie. Easy on your, I'm not even old enough to have used a pocketbook, but whatever. So you can add value to your customers in ways that are easy on your checking account or on your bank account, but mean a lot to your clients. And what that means is sometimes that's reaching out, right? Just a simple phone call to your clients. It doesn't cost you anything, but reaching out and making that personal connection with a client that maybe you haven't talked to in a while, because you're in the tax prep industry and you talk to your clients once a year. And even then you may not even talk to them. You may email them and work on everything electronically, right? So calling your clients or adding some emails in there with some information, right? You have information in whatever industry you're in, whether it's tax prep or financial advising, or you're an attorney, or maybe you're product-based, right? And you're in manufacturing or distribution or food services, whatever you're in, you have knowledge and expertise in that area. and you have knowledge and expertise in that area that will benefit your clients. So how about you write a quick email, do a quick newsletter, updating your clients on something you learned at your last, conference, or maybe something you've heard about that's going on in the economy or the market that might affect them, right? So adding value in the way of information, passing information on to your customers is free to you or very inexpensive depending on your situation. And it's going to add value to your customers, okay? So another thing, alternatives to cutting all costs, right? Because that's kind of where we're at right now. Identifying expenses versus investments. And next week, we are going to dive into this in depth. But to summarize, investments are going to lead to growth in your business and your revenue and in your profits, and expenses cut into your profits. So knowing the difference between investments and expenses is going to let you focus on how to spend money in your business to grow, right? Once you've identified investments that grow revenue, increase profits, and expenses that cut into your profits, you can make a data-driven decision, right, to cut expenses instead of just cutting everything, right? And a good example of this is when you go through all your subscriptions, your annual and your monthly subscriptions, and you find things you haven't used in months or maybe years, that's an expense. If you're not using it, it's not producing revenue. It's not increasing your profit. So that's an expense, and you can get rid of that. All right, and we'll talk about that a lot next week. And the last piece, guys, is you have financial data. All right, as a business owner, you have financials. Use that financial data to make data-driven decisions. And if you've been around a while, you know data-driven decisions are that's my favorite phrase, because and it goes hand in hand with what we've talked about today, right? Like just arbitrarily cutting costs, not going to be good for your business. But making data-driven expense cuts will help you. All right. So in this aspect, if you're stuck in a scarcity mindset, and a lot of us get there, right? We focus on the negatives, right? We're like, there's no cash. Revenue is down. I'm getting the hiccups. And profits are down. All right. So that's the scarcity mindset. We're only looking at the negatives, which, guys, negative trends in your business and places where we're struggling are important to recognize, important to know, but they are not the only thing, and they can't be your primary focus. All right. So the abundance mindset focuses on what is going well. All right. What segments in your business are thriving? Okay. What is working? What is successful? So let's do an example. Let's say you're a printing company and you are printing, let's say, funny t-shirts. And you are also like punny t-shirts, those are my favorite. And you are also printing pop culture graphic tees, right? Like Marvel and Harry Potter or whatever. And you look at each of these segments, all right? Because you are using your financials to make data-driven decisions. You are able to see that your pun shirts are actually losing money this year, right? Or maybe they're having a 5% profit margin. Okay, let's say you have a 5% profit margin on these. But over here on your pop culture, you have a 15% profit margin, right? So this segment is doing better than this segment. So that's information, that's data you can use to make some decisions, right? Could you move resources from either a failing or a struggling area to your more successful ones, right? Where can we invest? Is there other places to invest in technology or people or new markets? All right. Abundance mindset is looking at the positives. What is working well? What could be working well? And not exploiting. To me, that's an aggressive word, but capitalizing on those, right? Capitalizing on things that are working in your business. All right. Making these abundance data-driven decisions does require an understanding of your financials. All right. And if you've been around, I am not one to ever tell you to put more on your plate as a business owner. In fact, my mentality is get shit off your plate, right? Most of us as business owners are doing 15 different things. My goal is to have you doing 2 or 3. As a CEO of your business, you should only be doing 2 or 3 big tasks. So I'm not telling you to start analyzing your financials and then making these data-driven decisions. I'm telling you to utilize your current team or invest in new teammates so that they can do all the back end stuff, right? They can create the financials, they can interpret the financials and give that information to you so you can make that informed decision. For example, this is what we do, right? This is what we do at Peak Prosperity. So our clients all have bookkeepers who do all the heavy lifting, right? They do all the data entry. We run reports. We manipulate the data. We extrapolate it, all the fancy words, right? So we can tell you, okay, like I said in the last example, this segment is doing really well. It's making 15% profit margins. This segment is actually losing money. So let's figure out, you either got to fix this segment or you got to get rid of that segment and reallocate the resources to this succeeding segment, right? So that's what an advisor or that person on your team will do, right? They will tell you, here's what everything looks like. Okay, then your job as the CEO is to actually make that decision. All right, I'm going to tell you that if we just cut off this segment, right, this failing segment, and we reallocate the resources over here, we're going to have to spend $0 more and we're going to make $100,000 more a year. Do you want to do that, CEO? And you're like, yeah, I do. So your job is to take the information provided to you, take the options given to you, take all of that information that someone on your team is manipulating and extrapolating, and you are to make the decision based off that. I am not telling you to do all the financial work. Not your job. All right, so some of the common mistakes and a few pro tips when it comes to this abundance mindset thing, right? So when it comes to the financial piece, an abundance mindset within your business finances, one way that you can quickly fall back into the scarcity mindset is by not revisiting your business plan and your financial health regularly. All right, so here I recommend at least quarterly, ideally monthly. You're looking at your business plan, you're looking at your financials, you're comparing the two, right? Here's where we plan to be. Here's where we are. Where is it different? Where are we struggling? Where are we doing well at? What do we need to change? All right. So when you're not looking at your financial health or your business plan regularly, you can't make those decisions, right? And what happens then is that you don't have any decisions to make until you're struggling, right? Cash is tight. You're like, oh crap, now we got to do something. Whereas if you're looking at it on a regular basis, you can see problem areas or potential future issues or potential growth opportunities before they're even at your door. Another thing is ignoring market trends. If you've been here before or you've been here for a while, that I do not believe in running your business based on other people's businesses, based on the market, but you do need to know what's going on in your market, right? It does impact. I mean, how the market's doing, how your industry is doing impacts your business. You are a part of that market. You are a part of your industry. So you need to know how it's performing. You need to know what's trending so that you know when there's pivots that are going to be required. Are you going to have to make a change coming up? For example, if you're seasonal, right, and your busy season's slowing down or your busy season's wrapping up, you can't keep all of those people that are working busy season for slow season, right? Things like that. So you have to kind of know your market for sure. And the last mistake I see is not seeking professional advice when it's needed, right? Just like I kind of sat on my soapbox above, you can't wear all the hats. Okay, if you want to be CFO, you got to be CFO. And that means making having 2 or 3 key tasks. One of those tasks is leading your leadership team, right? And you have 1 or 2 other things you're doing that are driving driving profits and growing your business. All right. So you cannot wear all the hats. So you have to hire help when it's time. So pro tips, again, it kind of goes back to those financials. So setting clear data-driven financial goals. Just like data-driven decisions are important, data-driven goals as well. And we've talked about this in prior trainings, that setting arbitrary goals, like what does that goal mean? So Set data-driven financial goals. Embrace continued learning. So scarcity mindset, so hard to unlearn. We just talked about that, right? That scarcity mindset is ingrained in us, and getting rid of that, it's not I have an abundance mindset, now I'm done. It's constantly working on that, because that scarcity mindset is going to keep creeping in for years and years to come. So one thing I recommend is reading. I have 4 books I recommend to you, and maybe I'll put them in the comments. I don't know. I'll add them somewhere. Think and Grow Rich by Napoleon Hill. I read that probably every year. Big Magic by Elizabeth Gilbert. Another one I've read multiple times. You Are a Badass at Making Money by Jen Sincero. Another one I've read multiple times. And We Should All Be Millionaires by Rodgers, who is my business coach. I read that every single year, at least once. It's so good, you guys. So good. And they're all different, but they all center around that abundance mindset. All right. And the last thing I recommend you guys is network with other growth-minded entrepreneurs. So join a mastermind, or start a mastermind, or join a small networking group, or join a book club that, is made up of abundance-minded entrepreneurs. All right. So those are how you shift from that scarcity mindset to that abundance mindset. And just remember, it is an ongoing learning cycle. All right. So what I challenge you guys to do next, there's always homework on these trainings, right? Is evaluate your mindset from a place of honesty. Do you operate out of a scarcity mindset, or are you pretty, abundance minded? Are you a combination? Are you like me and you're on this roller coaster of like, there's plenty of things. Oh my God, the world is, small, so there's this roller coaster. Where are you? So evaluate your mindset. And then my other homework to you is to read one of those books I suggested. And I will put them in the comments, or I'll add it to the description when the video is over. So those of you that are watching live, Think and Grow Rich by Napoleon Hill, Big Magic by Elizabeth Gilbert, You Are a Badass at Making Money by Jen Sincero, and We Should All Be Millionaires by Rodgers. So that is your homework. So next week, it's time for L from the wealth model, and that is lean on your numbers. So that is the one that you guys are going to want to skip, because it is numbers driven, but do not skip it. It's important. Watch it. Next week, our training will be on Friday instead of Thursday. I will be traveling on Thursday, so coming home from a conference or retreat. So Friday, same time, different day. So I will put that I'll remind you of that in the groups where you guys all watch us. But that's it. I went over on time a little bit. Sorry, but thanks for joining me. And I will see you guys next week.